What is the current scenario on interest rate hikes by Fed as Ellen was succeeded by Powell? This is a very important noteworthy question as this will play a vital role in the dollar, which will reflect on the Indian currency as well. Federal Reserve officials at the January meeting saw a brightening global economic picture and the effects of recently passed tax cuts raising the prospect of solid growth and continued interest rate increases. The minutes of the Fed's Jan 30-31st discussions showed that the officials were more optimistic about the economy than they had been in December. They noted a stronger US and global economy as well as expectations that the Republican tax cuts enacted in December would boost growth. The minutes released Wednesday said a majority of participants noted that a stronger outlook for economic growth raised the likelihood that further gradual policy firming would be appropriate. The Fed held rates steady at January meeting, which was the last to be held by Janet Yellen before her term as chair ended this month, and she was succeeded by Jerome Powell. Last month's meeting preceded the stock market plunge in early February and the budget deal in Congress that will boost spending on military and domestic programs by an additional $300 billion over 2 years. Some economists have suggested that the market turbulence and the prospect of higher federal debt and higher bond yields might make the Fed more cautious about raising short-term rates. Paul Ashworth, chief US economist at Capital Economics, said he is forecasting 4 Fed rate hikes this year on the basis of his expectations that inflation will finally rebound this year and the decisions by Congress to cut taxes and boost spending will increase economic growth. The minutes show that officials were firmly on track to raise interest rates again in March, even before the latest incoming data showing stronger wage growth and core inflation. The Fed rates increased 3 times in 2017 and signaled at its December meeting that it expected to do so 3 more times in 2018. But many analysts now think the Fed its rate increases and boost rates 4 times this year. That would likely cause consumer rates such as mortgage rates to rise more quickly. The Fed's benchmark rate remains at a still low 1.25 to 1.5%. Investors are awaiting the release of Friday the Fed's twice-a-year monetary policy report to Congress for further clues to the likely path of rate increases. They will also be listening next week when Powell testifies on Capitol Hill about the report. It will be Powell's first public appearance since he assumed the Fed's chairmanship early this month. Powell, who has been a Fed board member since 2012, was tapped by President Donald Trump to be the next Fed chairman after the president decided not to offer Yellen a second chance. Powell is expected to continue the same gradual approach to raising rates that Yellen followed. That's worth noting the point.